Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, December 23rd, 2009. In U.S. trading, the major equity averages are trading mixed to flat in today's session, with the Nasdaq seeing gains. Now, there are a slew of U.S. economic data releases out this morning, and new home sales for the month of November in the U.S. disappointed to the downside. Now, new home sales for November tumbled 11.3% to a seasonally adjusted rate of 355,000 units. That was the lowest level since April of 2009 and also a result of the new home buyer tax expiring. And in terms of other economic data releases out this morning, the Commerce Department reported that personal income rose by 0.4% in November from the 0.2% in the previous month. Meanwhile, spending was up by 0.5% in November from the 0.7% in the prior month. And the final reading of the University of Michigan's Reuters Consumer Confidence Index came in lower than its initial estimate and came in at 72.5 from the 67.4 reported in November. And shifting our focus on over to the spot FX market, the US dollar is trading range-bound against the majors, but did fall following the release of new home sales figures. Now, trading for the majors does remain fairly range-bound due to holiday-thin trading conditions, and also this is adding to volatility as well as exaggerated moves in the spot FX markets. Now, one way to trade your views on US dollar strength or weakness is to take a look at ISE's FX options. One advantage is that they are US dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, in your daily trend report, let's take a look at the major ISE FX option pairs, starting out with AUX, which is the US dollar against the Australian dollar. Now, for that pair, a continuation of the rebound is expected. The pair is shaping a rounding bottom, which does call for a bounce. The preference of trading central analysts for the AUX is long positions above the pivot of 106.30, with targets standing at 118.15 and 122.50 in extension. Now, moving on to the BPX, which is the US dollar against the British pound. A continuation of the rebound is expected. The pair has rebounded on its support and is breaking above its resistance. The RSI for that pair is also well directed. The preference of trading central analysts for the BPX is long positions above the pivot of 60 with targets at 63.50 and 65.50 in extension. And now taking a quick look at the CDD, which is the US dollar against the CAD, the RSI does call for a bounce. The preference of trading central analysts for the CDD is long positions above 104 with targets standing at 108 and 111.25 in extension. Now moving on to the EUI, which is the US dollar against the euro, the upside does prevail. The RSI is well directed, and the preference of trading central analysts for the EUI is long positions above the pivot of 67.80 with targets standing at 70.50 and 72 in extension. Very quickly taking a look at the SFC, which is the US dollar against the Swiss franc, the bullish bias is currently above 102. The pair has also broken above its short-term bearish channel upper boundary and is approaching its resistance. Now, the preference of trading central analysts for the SFC is long positions above 102 with targets standing at 106 and 108 in extension. And now, last but not least, let's take a look at the YUK, which is the US dollar against the Japanese yen. For that pair, gains are expected. The RSI has broken above its medium-term declining trend line, and the pair is also challenging its bearish channel upper boundary. The preference of trading central analysts is long positions above the pivot of 88 with targets at 92.40 and 96 in extension. And in our next segment, let's take a look at your trend opinion. Now, last week, the US dollar did continue to strengthen against all the major currencies, and Trading Central did reach a target on their AUM puts with a 100% gain. Now, in terms of performance summary for Trading Central's portfolio, it is up by 669.81% since its inception in August of 2007, and since the beginning of this year, it's up by 1,300.81%. Now, taking a look at your trade alerts, this week the US dollar does remain stronger against the major currencies, so Trading Central analysts do have a trade alert for you for the EUU, which is the euro against the US dollar. Now, Trading Central recommended considering puts on the EUU last Monday in their follow-up, and the pair has broken below its bullish channel lower boundary, and the RSI is currently badly directed. Also, they are looking at the SFC, which is the US dollar against the Swiss franc. And it is similar to the EU, and it is currently approaching its next resistance at the 106 level. And last but not least, the BPX, it did rebound on its support and should post a further up move towards the 63.50 level. Now, looking ahead to next week, it will also be a holiday shortened week, so most of the trends in place right now are expected to remain intact. Now, Trading Central will be looking at the YUK, CDD, as well as the AUX. Now, they will be looking at the YUK because it has rebounded on its strong support and is also challenging its medium-term bearish channel upper boundary. They will be looking at the CDD because it is testing its medium-term declining trend line, and a break above that 108 level will call for a further up move towards 111.25. And for the AUX, it is shaping a V-bottom pattern and should post a further bounce towards the 118.15 level as the daily RSI is well directed. And that does wrap it up for today's weekly FX options report. Make sure to tune in next Wednesday for your latest update as well as your special holiday edition. Thanks for watching and have a great day.